So my advice, not to go over 20%.
So you say 10% or 15%?
Let's say 20 is the maximum you can give, but depends on what is the ticket size.
True.
So usually with the early investors, you would probably want to take a convertible loan from them because it's easier to convert them than you are having a bigger round. Then it will be a fair conversion. You will not giving a lot of your company to the first investors who are, again, they are very critical because it's you either grow fast enough or you're continuing by let's say working out things yourself. And in the later stages, it's more about giving away like 5%, 6%. But you will come across a lot of investors saying, Chris, amazing idea, I love it, give me 40% of your company, I'm gonna put 10 million into your company. Never go into that. And again, coming back to the question of the how much the terms and conditions of the VCs. So sometimes you will not get all of your money right away. You will have a roadmap of when you're achieving a milestone, then they can transact you the money. This is again to avoid you burning money unnecessarily.
Very, very interesting.
So stick to, let's say, comfortable 15, 17%. But look in how much you think you will cost. In 3 years' time, probably this is the shortest period. Yes, they will, especially if you don't speak legal language. They will be very scary. So you will need to have a lawyer. And looking for the lawyer, look into somebody who already worked with startups. So kind of startup-friendly lawyers. Then they are more eager to explain you what is what and advise you on the terms and conditions, because I know it's never easy to negotiate with investors, especially the guys who are already coming with professionalism on the pocket, hundreds of startups they invested in, maybe 200 they exited successfully, not successfully, because they want to have their gain, you need to have your gain from that. So you need to think very carefully about the conditions and don't be afraid to tell, I see that this point is better for me this way, and then have the explanation why you think so. That's why originally investment process, since the first communication with the investor until you'll probably get funded, might take 4 months, sometimes 6 months. It is really depending. So you have to be patient, but it doesn't mean that during this period you should stop doing the business and wait until money comes. You keep doing the things that you are doing, yes, but you are having negotiations with investors, and this is a part of your everyday routine.
Interesting.
I don't have a habit looking at the trends. I know many investors do this, but it's like fashion. So you're either stick to buying new collections, then the collection is getting old and you need to do something with that collection. It's like you invested when the startup was in trend, and then there is a new trend and your startup is not performing that well. You're starting to think, okay, probably we need to ask the startup to find a new investor so that we can invest into somebody else who looks more attractive than the startup. Normally what I do is I would go through a conversation with the team first. What we are looking for, what we need to and what's our actually end goal towards the companies we are looking for. Then I look at the pitch decks. Usually I ask every member to look at the pitch deck because we have different views. And then we come together and we discuss, okay, whom do we want to talk to? I try not to come alone to the first meetings. I take somebody. So if it's a tech company, then I take a tech expert with me because he will ask the right questions in the beginning. I know the VCs, they are doing, let's say, this tech screening later on when they have the term sheet. But I prefer when it's done in the beginning. So there is a person who asks certain strict questions, and then we see if it's eligible for us to continue with them, or we just give them some good advices and say, guys, sorry, but you need to, here's your weak points and you need to work on them, at least in the beginning, then you can come back to us after 6 months, probably, if we still have enough cash. And the last but not least, putting the bunch of documents into decision makers table and trying to convince them invest into the companies that we screened, whom we analyzed, and giving our feedback why we think that this is the right companies for us. This is very rare occasion when a VC would trust an intuition. I do trust my intuition, and sometimes I see that we are really missing a good deals, but because of the people being more analytical and more rational in their thinking, you know, for me it's hard to convince them, like, hey guys, this is a really good thing, because they will probably even be bought by somebody very fast, or they can grow rocket sky, and we're gonna make enough money for our fund. Velvet, as you know, is more of an impact investing, which is very tricky because impact investing doesn't have a certain definition for companies whom you invest in. So is it like investing for good, investing into something that is impact, that can be also sustainability, or, but it's, you know, a very thin borderline where you might end up just doing a charity, because most of the impact investing is not has nothing to do that a company making profits, and the target of every investor is making that profit. Although in Velvet we are trying to trying to keep away from the standards, but me being involved 10 years into the startup industry, I still have this more of a traditional thinking. Although I do love to do charity, but charity, it's something separate that I do, and I don't ask anything in return. Whereas, again, playing by the impact investing, investing into something for good that can do something good for humanity, why do I ask shares for that? Why do I ask some money in return for that? So that's why it's very important that if you have been in that impact industry for many years, you will definitely understand that better. Or on the other side, like impact investing into smaller companies, which, you know, they are not gonna become top companies in the future, but they have a potential to grow quite well, and you can support them with some little money that Velvet is now doing. But I would say something that's close to my heart again is being more traditional, because I spent most of my life seeing traditional deals happening or not happening, and connect it with the startup events that are looking into traditional forms of the investments. So that's, you know, my personal thing.
Okay. And in this, I'll say, in a normal rate day, in terms of like what you see and what you go through, how many times do you see deals like, and obviously, how large are the rate of the deals as well?
Well, maybe 2 startups out of 10 they are getting funded.
Okay. So
Unfortunately, it's very low. Different reasons for that, why investors are not backing up the startups. So sometimes this is the lack of expertise in their house. Most common is that they already spent their money and they are raising for another round of money for themselves to be able to invest into another companies. The third is simply because they might like the idea, but they don't like the team. They don't want to work with these people for whatever reason. I had a case with an advertising technology company back during the COVID times, and we had investors from the UAE who were interested to invest in them. But one of the founders, he was from Israel with an Israeli passport. So they closed up.
Mad.
Yeah.
Mad. Is it really like they really take it into that high terms where if literally one detail like that, they'll literally just, on to the next?
It can be.
Wow.
I saw this happening myself. Although after that I started to advise with the other Arabs who are in business. I was saying yes, but he is a co-owner in this company. So there is another person who is having a European citizenship. So why it should be that problem? There's many ways how you can play around that, and the company is registered in Europe, not in Israel. Just because one person.
Yeah, true.
Yeah, and I was told that it shouldn't be a problem, but unless someone really doesn't like Israeli people.
Very, very interesting in terms of. I wouldn't even think that's the case, honestly. In terms of like, I wouldn't feel like they would go to that extent. But if you actually think of it, this is actually like legal battles here. This is like when you're dealing with investment, there's a lot of, like you said, law involved, which is almost like chess. So I could probably understand, like, in terms of why they're so skeptical to even make that move in the first place. But at the same time, I do see it like very interesting that they take all precautions and all measures, because certain people would think I didn't get the investment because of my business. No, that might not even be the case. It could be even who you are, or even the small thing that you do. So there's no really telling of like what it could be. Hence why I feel like it is very important, as you said, just to keep on working on your business, like no matter what. Even if, say for example, reviews, like they're giving back bad feedback or bad reviews, or if you're even not even getting any orders, but as long as you're still keeping the process going and you're still pushing towards that, there may be someone out there, like you said, that would definitely play a key approach and key role into that, which I found is very, very helpful and beneficial as well.
That's true. Another thing that I have faced many times working with other startups is that investors, when they are rejecting you, they are not providing you a good feedback. Actually, there is no feedback of what you are doing wrong. It doesn't have anything to do that you are not into their investment scope, but it has to do with something else, why they don't want to invest in you. So they will never tell you, there's a rare people who will tell you that, okay, we don't invest because of X, Y, Z, but usually you just receive an answer, sorry, we are not investing in you. So sometimes, yes, VCs, they don't have enough time to reply everyone, but it's very sad to see when the companies, they are not getting enough feedback and they don't know, okay, are we doing something really wrong? We would like to know it, we want to improve. This is why it's very crucial to communicate with the investors. So this communication building is very important. Then even if a person is not backing you up, he can tell you that, hey, you know, here's a little thing, you're not doing this right, but if you turn up doing this right, when you come to us next time, we will say yes. And it will give a hope to a startup company that everything is right with business.
Mm-hmm.